Before we dive in, make sure to subscribe to our channel, like this video, and leave a comment below. Your support helps us create more valuable content for you. Are you tired of bad credit holding you back? In just 30 days, you can transform your credit score and open doors to new opportunities. Stay tuned to find out how. Did you know that a 100-point increase in your credit score could save you thousands of dollars on loans and interest rates over time? Think about that for a second. Thousands of dollars back in your pocket, simply because you have a better credit score. It's like getting a free raise just for understanding your finances a little bit better. That's the power of good credit. And the best part? You can achieve a significant boost in just 30 days. In this video, I'm going to break down 3 simple, yet incredibly effective steps to boost your credit score within a month. We're not talking about some get-rich-quick scheme here, but rather proven strategies that actually work. These steps will set you up for better financial opportunities, whether it's securing a lower interest rate on a mortgage, getting approved for that dream car loan, or even just having more peace of mind when it comes to your finances. Now, I know that a lot of people struggle with low credit scores. It's something that can hold you back from so many things in life. But the good news is that you don't have to let a low credit score define you. It's time to take control of your financial future and start building the credit score you deserve. Let's dive in and address this challenge head-on together. All right, let's kick things off with the first step, and that's reviewing your credit report. This is absolutely crucial, guys. You need to know exactly where you stand before you can start making any improvements. The good news is, getting a copy of your credit report is completely free and easier than ever. There are 3 major credit bureaus: Experian, Equifax, and TransUnion. You're legally entitled to a free copy of your credit report from each bureau every 12 months. Now, I know what you might be thinking. Graham, do I really need to check all 3? And the answer is a resounding yes. Each bureau might have slightly different information about your credit history. This is because not all lenders report to all 3 bureaus. So by checking all 3, you get a comprehensive overview of your credit profile and can spot any inconsistencies or errors. Think of it like this. You wouldn't just look at one side of a coin to determine its value, right? You'd want to examine the entire thing. Your credit report is the same way. You need the full picture to make informed decisions. Now, once you have your credit reports in hand, take some time to go through them carefully. Look for any errors, inaccuracies, or things that don't look quite right. This could be anything from incorrect addresses and account balances to accounts that don't even belong to you. You'd be surprised how common credit report errors are. A study by the FTC found that 1 in 5 consumers had an error on at least one of their credit reports. So don't just skim through them. Pay attention to the details. It could mean the difference of several points on your credit score. If you do find any errors, don't panic. It's actually a pretty straightforward process to dispute them. Each credit bureau has its own dispute process, but generally you'll need to provide documentation to support your claim. This could include things like a copy of your driver's license, a utility bill, or a police report if you're dealing with identity theft. Once you've filed a dispute, the credit bureau is required to investigate and respond to you within 30 days. If they find that the error is legitimate, they'll correct it, and your credit score could see an almost immediate boost. It's like getting free credit score points just for being proactive. Remember, your credit report is a living document. It's constantly being updated with new information about your borrowing and repayment history. That's why it's a good idea to review your credit report at least once a year, even if you're not actively trying to improve your score. By being vigilant and staying on top of your credit report, you can catch errors early on, prevent identity theft, and ensure that your credit score accurately reflects your financial health. It's one of the simplest, yet most effective ways to take control of your finances and set yourself up for success. Let's move on to our second step, which is tackling that pesky debt. Now, I get it, debt can feel like a huge weight on your shoulders. It can be incredibly stressful and make you feel like you're constantly playing catch-up. But the good news is, it doesn't have to control your life. By implementing a strategic plan to pay down your debt, you can significantly improve your credit score and regain control of your finances. One of the most effective ways to pay down debt is to focus on high-interest debt first. This is where things like credit cards often come into play. Those high interest rates can really eat into your monthly payments and make it feel like you're barely making a dent in the principal balance. There are 2 popular methods for tackling debt that I want to talk about: the Snowball method and the Avalanche method. Both are super effective. but they approach debt repayment a little differently. Let's start with the Snowball method. This method focuses on building momentum by first targeting the smallest debt you have, regardless of the interest rate. The idea is that by paying off a smaller debt quickly, you'll get a psychological boost that will motivate you to keep going. Think of it like this. You're rolling a snowball downhill. At first, it's small and manageable, but as it rolls, it picks up more snow and gets bigger and bigger, gaining momentum along the way. The same principle applies to your debt. Once you pay off that first debt, you take the money you were putting towards it and apply it to your next smallest debt, and so on. Now, the Avalanche method, on the other hand, is all about saving money on interest charges. With this method, you prioritize your debts by interest rate, targeting the debt with the highest interest rate first. By focusing on the highest interest rate debt, you're effectively minimizing the amount of interest you'll pay over the life of your loans, which can save you a significant amount of money in the long run. So, which method is right for you? Well, it really depends on your personality and financial situation. If you're motivated by quick wins and need a psychological boost to stay on track, the Snowball method might be a good fit. But if you're more numbers-oriented and want to save as much money as possible on interest charges, the Avalanche method might be the better choice. Regardless of which method you choose, the key is to be consistent with your payments and stay focused on your goal of becoming debt-free. Remember, every little bit counts. Even if you can only afford to make small extra payments each month, it will add up over time and help you pay off your debt faster. Now, I know that paying down debt can feel overwhelming, especially if you have a lot of it. But trust me, it's totally doable. By creating a plan, staying organized, and staying disciplined, you can achieve your debt-free dreams and significantly improve your credit score in the process. All right, let's move on to the third and final step to fixing your credit in 30 days. Making those payments on time, every time. This step is absolutely crucial, guys. I can't stress it enough. Your payment history makes up a significant portion of your credit score. It's like the holy grail of creditworthiness. Think about it this way. Lenders want to see that you're responsible and trustworthy with borrowed money. They want to be confident that if they lend you money, you're going to pay it back on time, as agreed. And the best way to demonstrate that you're a reliable borrower is to have a solid track record of on-time payments. Now, I understand that life can get hectic. We're all busy, and it's easy to forget a due date or two, especially if you're juggling multiple bills. But here's the thing. In today's digital age, there's really no excuse for late payments. Most lenders offer online bill pay, and many even have auto pay options where you can set up automatic payments each month. This means you never even have to think about making a payment. It's all taken care of automatically. Talk about peace of mind. But even if you prefer to manage your payments manually, there are still plenty of tools and strategies you can use to stay organized and on top of your due dates. For example, you can set up payment reminders on your phone or calendar, or use a budgeting app that tracks your bills and sends you alerts when payments are due. The key is to find a system that works for you and stick with it. Make it a habit to review your bills and schedule your payments as soon as you receive them. That way, you're not scrambling at the last minute and risking a late payment. Now, I know what you might be thinking. Graham, what if I've already messed up and have some late payments on my credit report? Don't worry, it's not the end of the world. While late payments can stay on your credit report for up to 7 years, their impact on your credit score diminishes over time. The older a late payment is, the less impact it will have on your score. The most important thing is to focus on establishing a positive payment history moving forward. Start by making all of your payments on time from here on out. This will show lenders that you've learned from your past mistakes and are committed to being a responsible borrower. You can also consider contacting your creditors and asking for a goodwill adjustment. This is where you basically plead your case and ask them to remove the late payment from your credit report as a gesture of goodwill. It's not always successful, but it's definitely worth a shot, especially if you have a good payment history otherwise. So, there you have it. 3 simple yet incredibly effective steps to boost your credit score in just 30 days. By taking the time to review your credit report for errors, creating a plan to pay down your debt, and making on-time payments a non-negotiable, you'll be well on your way to a healthier financial future. Remember, your credit score is a reflection of your financial habits. By adopting responsible habits and making smart financial decisions, you can build a strong credit history that will open doors to better opportunities in life. Don't let a low credit score hold you back any longer. Take control of your finances and start building the credit score you deserve today. If you found this video helpful, don't forget to give it a thumbs up, subscribe to my channel for more personal finance tips and tricks, and hit that notification bell so you never miss an upload. And as always, thanks for watching. Also, leave a comment below with your thoughts or any questions you have. Your feedback helps us create better content for you.